All right. Today we're going to talk to you about the only three indicators you need for short-term or long-term investing. The only one you really need in order to make money or not to lose a lot of money. I will show you how I'm using it and what I recommend you to do. Of course, it's not a financial advice, and this is my only personal opinion. Let's dive in. Let's start with a couple charts here. I would like to explain to you what I'm using for trading. Let me see. Let's choose, for example, one stock that you guys all love, for example, Nvidia. The first thing I would like you to talk about, okay, the first thing we need to do is to add a moving average. The only one I recommend you to use for short term is the 20 moving average. The long term one gonna be 150, and for short term and long term I like to use the 200. Let me start with the short term first. So as you can see here, the moving average, the 20 moving average is very, very supportive here in the chart. The moment the chart goes above the moving average, the 20, you can see how is supporting the price here. The moment we break the moving average 20, we're gonna be in a bearish trend. I want you to see how you can use it. The moment that the moving average is far from the price, you can buy right now. You can feel more comfortable because you're far from the 20 moving average. The moment you're too far up, you can short it comfortably because you're too far. So that's every time getting respect. I want you to see how the moment we got a bigger gap between the moving average, the 20, and even sometimes the 200 gonna use as a floor or as a ceiling. You can see it's not exactly, but here is the ceiling, here is the floor. This is just Nvidia in the last 5 days. Let's go to another stock, for example, the chip maker Intel. Right now, experience a lot of volatility. Here, you can see how very respectfully we go above it, and if you're a short trader, you hit the 200 moving average, you short the trade, you hit the 20 moving average, you can long again, and so on. Of course, it's not every time. You don't need to take it as a guarantee. You need to use it in order to help yourself to take a decision based on the pattern that you're already thinking. I want you to see how we're going to use it even for long term, because here you see 1 year Intel trade. This too is the AI target for the low and AI target for the high, but based on that day that I run the analysis with Analytick AI with Intel stock. So it's not the overall AI target for the high. I want you to see how the moving average, the 20, getting so much respect here because we are in uptrend, we are above the 20 moving average, then we support by the 20 moving average, we got up again, support again, and the moment we break it, we start to get into a bearish momentum. Here you can see it's act as a ceiling, go down again, act as a ceiling, go down again, and the moment we broke it, you can see how it's act as a floor. For long term, I use for more established stocks, not like the chip maker, the semiconductors run crazy recently. I like to use the 150 moving average. This is the third one. The 150 moving average you're gonna see in the different stocks, probably gonna be more established one, not ones that range so high. Tesla, for example. Let's see how we respect. I'm having a rule for myself. If the long term position is under the moving average, the 150 moving average, I'm out. If it's above, I can stay inside for long term, for long position. For example, here we see, let me remove the other moving average that you're not gonna get confused. Let me even change the color of it, green and green. It's confusing. So I will have another one, new one. You can see that right now with Tesla, we are under the moving average. This is the 200, I'm so sorry. Still, we're under the 150 moving average. Some traders use the 200 moving average for long term as well. I like the 150 moving average. If the price is above, we see the bullish momentum. If the price is under the 150, we already start to get a signs here that this is going to be a bearish momentum. As you see here, you got it. The moment you go above it, I'm going to feel more comfortable. Of course, not like that. And this is my 3 rules for today. 20 moving average is for short-term position. 150 it's for long-term position, and the 200 moving average can be for both of them. And I will give you another example. Let's try to see even smaller cap stocks. SoFi, for example, we got the moving average. Here is the 200 and the 150, so that's why you don't see it. Here is the 20. Let me remove the 150. And as you see here, if you was interested to take a trade and you're respecting the rules that I just teach you right now, you can feel more comfortable to take long position because we are far from the moving average, the 20. And the moment we passing them, you can look for your trade again. You see how we got very nice support with the moving average 20, and then even having a small hard time to pass the 200 average, but the moment he pass it, you can see how comfortably it stays above. I really like the 20 moving average. I'm not really considering the 200 too much. I just taking it in consideration, but the moving average, the 21, is the one that I really respect. Tell me, guys, what your moving average that you use the most? I would like you to tell me in comments if you're using that, and if you're gonna use it maybe. Of course, it's not financial advice, and don't trust only that. I want you to take in consideration the market condition. Something that I don't like to do, and this is number 1 rule that I studied many years ago, is when the market is red, you should respect it. When the market is green, you should respect it. So of course, don't go against the market. Depends if the stock has news, if the stock has some analyst rating change, insider exactly bought a lot. It can be many things to make the decision change. Of course, you were very welcome to use Analytick AI. I will have for you 1 free month sign in, and I will give it. Sorry about it. Let's cut it. And of course, don't forget to use AI to consider your trades and investing with AI. Read deeply about the company. Don't just take decisions based on the chart only, and respect the fundamentals as well. Sometimes we got a big news or big reports that can change the moves to different directions. I hope you enjoyed the video. Hit the thumb like and subscribe if you like it. Have a good day.